Hey, looks like it could be live, although I'm getting some errors on streaming, so it could be a bit slow and a bit choppy. Hey, got a few people online, so that's pretty good. So I might as well give it a start, and hopefully the connection I've got will get a bit better. For some reason, working from home and everyone seems to be online at the same time, it just gets really, really bad at certain times of the day. So what I want to do is just try and reconnect with traders over YouTube, purely because it's been a tough year, and for whatever reason, not been able to get out and chat with anybody and do anything. So just want to have a quick sort of market scan and see where we are in the week, and hopefully look at some possible trade setups that might happen towards the end of the week. So what I like to do is always have a quick overview of where the market is. And so what I like to do is look at the daily 4-hour and 1-hour chart, just to see where the markets might be trending. So pretty much the indices at the moment seem to all be following the S&P 500. That's the main market. Also, the US market's the strongest one with the bigger stocks, and as such, whatever they do, the rest of the markets follows. What we are seeing though is that the FTSE started to move away from that one and start to come into a downtrend. So as we can see here, majority of the 2020 rally was all in an uptrend, so the daily chart is looking very strong, very green, very positive. The majority of them are now sort of heading sideways, with the FTSE starting to trend off. We can see the same within commodities. Gold has had a very much a sideways movement over the past year, and starting to break down through the current support levels it's shown over the past couple of weeks. Forex, again, very much up and down. We're seeing some very good trends over the past year, but recently with the dollar gaining a bit more strength, we're now seeing a bit more of a correction. It could be that it's just a correction on the trend, and therefore we start to see some more positivity. What I'd like to see if I'm going to trade in a direction is all of these green or all of these red for shorts or longs. But as we can see, a little bit of blue is a bit of indecision. And always keep an eye on cryptocurrencies and Bitcoin. And that's now starting to show a bit of weakness, especially on the daily chart, since this big rally coming up through the 42,000 mark beginning of this year. So what I want to do is go through some charts and just look where we're seeing some of these things. So on the euro dollar, obviously this is the most dominant currency pair, Eurozone being very heavy within the currency, and the dollar being the main currency pair traded against. So again, if we look at the daily view here, we've had a strong uptrend. But what's quite key at the moment is we're seeing a level of support forming around about the 1.205 level. Now that was tested today. If we look on the 1-hour chart, that was tested. And if we see a continuation break of that one, we're looking for some short selling coming into the market. Again, on the 15-minute chart, we've seen a big rally this afternoon coming up from some announcements earlier on the day. Big rally coming up, and obviously now we're starting to see the sellers come back into the market, expecting to see some more weakness in the euro dollar coming back down, possibly all the way down to 1.20. Again, looking at the daily chart, if it breaks through that line, we could see 1.18, but that'd be quite unlikely considering the dollar strength we've seen. Same thing with GBP USD. We've seen on the hourly chart it's been very much in an uptrend over the past week, and again getting very choppy in the past session. So I'm not looking for any trades on this one right now, although if we look on the 15-minute chart, we've seen a breakthrough from where it got to these recent highs. It was going very much sideways. It broke through that today at the 1.37 level, and again potentially looking through some short movement over the short term. But again, because the daily trend has been quite strong, and we know with the British pound now that we're out of Brexit, there's potentially some more buyers coming to this one. So just wait and see how it develops over the next day or so. Pretty much the rest of the currencies are showing the same things. There's been a huge move in the The yen today, that's probably more to do with dollar strength than anything to do with the yen, predominantly being because the yen session has been closed. We're seeing more of these moves based on the actual dollar strength that's been coming into the market over the past couple of weeks. That would be exactly the same for the Swissy. Again, we've seen a big surge in that one today, starting to sell off for whatever reason. I have no idea. But again, because the direction is not clear, I'm not looking to trade that at all. What is interesting though is on USD CAD. We're now starting to see a real change in direction, especially from the daily chart is showing some real downward momentum. It's been in that way pretty much for the past 6 to 8 months. Now we're seeing a retracement back up to this 50 moving average line and potentially rejecting that, coming back down. So this is where I would be looking for some short selling, trying to find a confirmation, especially on the 4 hour or the 1 hour chart. So 4 hour chart, we've seen a slight upturn. It's broken through the 200 moving average. But again, this sort of candle here is showing that the sellers are starting to come back into the market. So I'd be expecting the price to fall down. Again, on the lower time frames, especially the 15-minute, we can see this big rally up today, and again a rejection at this level and price starting to fall. Again, I want to see a bit more consistency, and this is a trend. It's very choppy at the moment, so I'll be waiting for a longer term swing trade on this one to hopefully expect it to come back down. I want to take a quick look at gold because that has been one of the most fascinating ones I've been trading recently. Gold often is seen as a safe currency or a hedge against inflation. So when markets are doing pretty poor, the gold tends to go up. But as we can see here from the big rally and the surge it had, and the all-time high in July last year, we've been very much in a downtrend, in a down channel. And if we zoom in very slightly on the daily chart, price has been squeezed between the 200 and the 50 moving average. Now, as a technical trader, this is where the institution of the banks like to see a movement. So anything between that range is a real indecision. I'm just waiting for a breakout to one of those sides, and especially with this downwards channel we're seeing, potentially the price of gold could come back down to the $1,700 mark, which would be quite nice if we can catch a short on that. But again, there's no confirmed entry for me at the moment because we'd need to break the 200 moving average for that to happen. That's still quite a way off. But what is quite good at gold is trying to trade it on a more of an intraday trend at the moment. We are seeing smaller trends forming, especially on the 15-minute chart. It's been quite consistently down over the past couple of days. But what is interesting, I found, is that the gold is often reversing in the afternoon US sessions. We saw that last week when Biden came into power. We might set on an hourly chart. It was pretty much here. It's this one here actually, on the 20th. So we saw a bit of resistance kicking in at the 1560 level, and it bounced off that, came all the way down. Inauguration started and price started to rally. Since then it's been tailing off. Again, looking for shorts in the gold market to bring that back down to the 1800 mark. Just touching on the indices here. The S&P 500 been very, very strong bull market over the past year. We can see that from this chart. It's just been going up and up and up, even with the COVID crisis. So again, on a weekly chart, we can see that the COVID crisis kicked in March. It's just rallied and rallied and rallied. Now we're 1 week into the new Biden administration. I'm not quite sure what financial policies he's going to be putting in place. So there's potential for this to fall off and come back into the moving averages, back down to the 3,600 level. At that point, I can see more buyers coming back into the market and this surging back up. It's not one that I often trade, but it's good to see that the S&P 500 does tend to lead the rest of the markets. FTSE 100, as you can see on the hourly chart, it's been in quite a nice downtrend recently. This is one I have sold today. A couple of little breaks from the pullback into the 20 and the 50 moving average, just taking sort of 20-30 point moves on it, which was quite nice. And if we can see again from the daily trend, it has been trending upwards quite recently, but looking at the 4 hour, it's coming off and starting to go down. Same 1 hour chart and even the 15-minute chart. So for me, that's getting a confirmation on multiple time frames where price is all going in the same direction. So I'm quite happy to short that at the moment, especially with seeing a lot of nervousness around the UK handling of the coronavirus, and who knows how long lockdown is going to last. So a couple more things that are quite interesting. It's always good to look at the news. Now, there's not much news coming up this week. So I always go to Forex Factory and the calendar on this one to get any news. The big one today has been the crude inventory figures came out. There's a much more of a shortage within oil. Not as much been produced and pumped as has been in the past couple of weeks. So that's why we've seen a surge in the price of oil today. Later on tonight, we've got the federal rate announcement, which in itself, we know that the likelihood is that the interest rates are going to stay at 0.25%. There's going to be no change there, just because the policy is such that they can't increase interest rates in the current financial situation. And obviously that's been a major thing that Trump's been putting in over the past 4 years, keeping interest rates as low as possible. Maybe they'll raise in the next year, but at the moment they're going to stay at that 0.25%. Often the monetary statement policy comes out, and that has an effect on some of the currency pairs. I will make sure that if I've got any currency trades open, I will always close them before that news announcement, because they could just spike and take my stops out. Again, looking forward to the week ahead. Again, nothing major on news articles coming out. It's going to be a fairly slow week by the looks of it. Just scroll down. Very few things coming out tomorrow of any note, same as Friday. The big one for next week, as always, is non-farm payroll figures coming out on the 5th of February. Always good just to make sure that any trades open around that time are closed off, because any announcement coming out is going to spike quite rapidly. So as I mentioned before, most of the currency pairs are trending against the dollar. As we can see here, if we just zoom out a little bit on essentially the dollar index, this shows the relative strength of the dollar. And for the predominantly thing of the end of last year, it was weakening. But since the beginning of January, there has been a lot more strength coming into the dollar. I'm not an economist, so I'm not sure why it's going to happen. All I'm looking to do is try and find some trends. And if I'm looking at strength in the dollar, then I'll be looking to short some of the other currency pairs to make sure that I can take advantage of this movement up. It's always good in the morning just to check where the dollar has been moving to, potentially looking for any support and resistance levels on this particular chart to see where it might come down. As I mentioned earlier, around the oil, the inventory figures came out today, and there's significantly less oil being pumped in the past week than there has been. So that's why we've seen this huge spike up in oil today. Now, potentially oil has been in a nice upward trend if we look at this on a daily chart. It's been trending up nicely for pretty much the whole year. We're coming up to a resistance level of around about $54 on the US oil. So potentially there could be some shorts because it's going sideways in the range. Just looking on, hold on a second, let's go 4 hour. We can see there's a bit more sideways movement on the oil. Draw that in. So yeah, starting to become range bound between $52 and $54. A breakout of either of those could see price dramatically moving back down, potentially to the, who knows, $48 on the downside, maybe $60 to the upside. Want to keep watching that one for now. So I want to take a quick look at a few shares. So the UK market, as we know, has been pretty static. Now, one that I like to keep an eye on is Tesco's. They're one of the few shops that we can go to at the moment. Price has been recovering quite nicely. There's always a surge around the Christmas times when they announce what the sales have been. But as we can see, there's been a pullback in and now a bit more buyers coming to the market. Potentially, if the FTSE does sell off a little bit more, then the price is going to come back down maybe into 235. But that's when I expect to see some more buyers coming into this one. One of the most popular shares to trade on the FTSE is Lloyds Bank. Relatively cheap and quite a nice one to get into because it does trend and it can move quite a bit. We can see pretty much for the end of last year it was in a much downward trend, bottoming out around about 23 pence per share, and since then it's been recovering quite nicely. As we can see this year it's been going from 32 up to 40, so it's almost a 25% increase in the share value. And it's also been a lot more volatile than normal, as we can see by the size of the bars. I expect to only see sort of 1 or 2 pence movement per day, and we're seeing here 3 to 4 pence on any particular day, which is quite a significant move on Lloyds Bank. Personally, I'd like to see the price come back down to 30 pence, and then I'll start buying that one again. Now, some of the big stocks that's always getting the headlines at the moment is Tesla. Now, they are just rocketing up. For some reason, they are not being affected at all by any negativity. I think the main reason for Tesla being a massive increase, and again, if we look on a weekly chart, this is really evident of the rise in their share price, especially this year. It's been a huge increase. Now, the main reason for that has been they've invested heavily in their production plants, opening a new production plant in California and soon to do one in China. And also they've sorted out their production problems they had with the Model 3, and they're now able to produce 160,000 Model 3s every quarter, and every one of those is being sold. So there's a huge demand for Tesla still, and that's why the price is rocketing up, and Elon Musk is now obviously the richest man in the world by quite a margin. I don't see this stopping for any time. The more they keep opening their production and the more they're able to fulfill that, I can see prices going up and up on Tesla. There will be a pullback at some point, but not a dramatic one on this one. But again, because of the value of the stock, there's no way I could afford to buy any of these, so it's just a case of watch it and enjoy the meteoric rise of Tesla. Now, one company that's massive in the news at the moment is Pfizer. As we've seen with the coronavirus and the vaccine coming out, they are obviously the first player to announce the vaccine being approved by the UK and by Europe, and now being rolled out in the US. Now, we're expecting, with the announcement of Pfizer and the vaccine, which was announced around here in December, price did rocket, but has been selling off quite considerably. The only reason I can think for this is because the vaccine is seen as almost a non-profit. There's a lot of effort gone into that, and they're not going to be making much money out of it because they're trying to deliver it as quickly as they can to as many people as they can to get through a pandemic. And now we're also seeing a lot of other labs producing it for them, so they're not able to keep it in-house, just to try and meet supplies. So I can see potentially Pfizer coming all the way back down to pretty much the 3200 level in the next couple of weeks, especially as more vaccines get certified, and therefore they're no longer the dominant player. We've seen Johnson & Johnson looking to get theirs certified in the UK in the next couple of weeks, and every country is also producing the same vaccines, and therefore it's just going to keep the price tumbling. Now, Bitcoin, I love keeping an eye on this just because of the wild ride that it is. It's just so interesting to watch. And again, I'll zoom out a little bit on this one to daily chart. Now, when Bitcoin broke out through the 20,000 level at the end of last year, it just went up and up, doubled itself in value all the way up to 42,000. And since then, it's starting to come down and make some lower lows and lower highs. So therefore, we're now seeing it in a downtrend and a lot more sellers coming to the market. Now, what we saw, if we go back even further on Bitcoin is when it had this rally last time in 2017, it went from the 5,000 mark to 19,000 and then came all the way back down over the next year. Now, the difference in the situation now is that Bitcoin's a bit more regulated. There's a lot more technology behind it to back it up. And we're also seeing a lot more institutions coming in to hold Bitcoin as a long-term investment. I think where everyone was talking of this hitting 50 to 100,000 this year is wildly off. I can see the price coming back down to the 25,000 mark, maybe into the 20,000, and then starting its next rally that may take a couple of years. Could be proven wrong. It could just skyrocket up. But if we've seen where it reached it last time, it fell from 18, 19,000 all the way down to around about the 5,000 mark again, as a 75% loss in value. I can't see it losing that much this time, because if that was to happen, we'd go down to the $10,000 mark, and there's just too much support around the 20,000 mark for that to happen. Especially all the banks and institutions have been buying it at this level. They're not going to let it crash that much. Often we see as a bit of manipulation in the market with some of the whales just selling their huge deposits of Bitcoin, as well as all the miners dumping it. But when you start looking at the daily chart, there is this sort of level of support around the 30,000 mark, between the 27 and 30,000. What I've often seen on Bitcoin is you tend to get a lot of spikes. So the tails on the candles, it's very hard to do an accurate support level. So it's almost a zone and a region. So pretty much between 27,000 and 30,000 is the support level currently. As at a break of that, we could see it come back down to 20,000 over the next few months. And obviously with cryptocurrency, where Bitcoin goes, the rest of them follow. So we can see on this list here are predominantly cryptocurrencies, 4% change on Bitcoin, and the rest of them are all around about between the 4 and 6%. So it's quite clear that there's a dominant player in the cryptocurrency market, which is Bitcoin, and the rest of them are all following suit. So pretty much I want to just summarize now. The market for me is in a real transition phase. That's quite evident by when we start looking at, for me, the ones I start to trade most, which is obviously the FTSE and the GBP USD. And we can see it's really in this transition phase between not to know what direction it wants to do. We're a week into the Biden administration, a lot of executive orders coming out that may change some of the market transition or the market phases. But at the moment I'm just waiting for a new trend to establish, whether it's an uptrend or a downtrend. It's just too sideways for me to be really getting in and trading on a long-term swing trade right now. It's just looking for those small intraday moves, and I'll continue to keep looking on gold for this one at the moment. So in the comments, anyone got any questions I want to fire my way quickly? Was this of any use to anybody? Nothing coming through. It's definitely been useful for me. It's been good to just talk these things through and get a bit more of a feel for where markets might go, and especially just to talk it out loud. It gives me more of a confirmation of where my mind is thinking and what trades I can start looking for in the future. But at the moment, for me, it's just too sideways and too just confused. Prices all over the place, and any news article coming out is having a wild ride. And also, for me, January is a bit of a poor month. We have often the huge surge, especially in the Santa rally. We look at indices. The Santa rally comes in, and obviously the stocks surge. There's obviously a lot of retail sales coming through, and obviously in the January there's an uncertainty in a strange period, and that's why you can often see that the selling coming in to then start to establish more of a trend coming through sort of January all the way through to March and April, especially for the earnings season coming out in the US, which then has a more of a positive effect on the markets. So although it's always nice to have trades open and start to try and make some money, it's always good to sometimes just sit on the assets and the cash and not go and be too gung-ho and just go into a market for wanting to be in a trade. And that's obviously the biggest mistakes. And some of the things that I often do is just, as I say, it's just one more trade. get to the end of the day and think, I'll just do one more trade to make a little bit more money. And it's always that one trade that always goes through and destroys any of the gains that have been made over the day, or sometimes even the week. So question, how many trades am I doing per day? Often looking for the good setups. So if it's on a good trending day, there could be 2 or 3 on any particular instrument. So if we look on this one on screen, that's still gold. I could be doing 2, 3, 4 trades on gold at any particular time. I'm only looking for a $2 to $3 move for it to go down or up. And so you're able to get in, especially when there's cyclicity in the market. And we can see at the beginning of the week, it was literally breaking down through the lows, coming back up, retesting and breaking back down again. So these are quite easy markets to get in on. It's where it's too choppy. It's just a case of stay away as much as possible. So any fundamental analysis, pretty much no. For me, I'm not an economics person, and trying to go through the fundamentals takes too much time to really read through all of the data. So I will look at fundamentals on the news coming through, so especially looking at non-farm payrolls or interest rate announcements. If they are likely to come through and have a big movement in the market, then that's when I will not trade, just because there's too much volatility and too much unknown. So next Friday we've got non-farm payrolls out. It's a guessing game. We can see the figures come out and look quite positive, and the market reacts completely opposite. An hour later, when the actual traders come onto the trading floor in the New York Stock Exchange, they'll have read the report and then reverse it completely. So for me, fundamentals are just too difficult to actually understand and work through. For me, I just want to see where price is moving, where's price interacting with certain levels on the chart, support and resistance, and then trade from there. Again, I'll try and keep my charts very simple, just with a few moving averages and the RSI indicator, so I can see where momentum is going. For me, anything where the RSI is below 50, the momentum is looking for short selling, and anything above, we're into buying. A lot of people try and buy or sell when the actual value gets to 70 or let's say below 30. For me, that's a bad way of doing it, because it's just showing that the trend is continuing. Yeah, my moving averages on a chart are 50, 200 and 20. I found over the years that when the 50 is below the 200, we're in a nice downtrend, and the price often follows the 20. Any number works really. You can set it as say 8, 20 or 50, and it's just showing the faster moving average, especially the 8 and the 20. Sometimes you get some nice little crossovers. So whether you can see on my chart, there's little arrows here. That's a custom indicator I put together, and that's based on the 3 moving average passing through the 10. When all of the timeframes line up, although I don't plot them on the chart, it gives me a sell or a buy signal. So on this one on gold, we can see lots of sell signals coming through. Obviously, that's when the faster moving average is crossing through. So how long have I been in trading? I've been trading about 12 years. So I started a bit longer than that in 2007, when oil was really surging up to $140 a barrel. I got very lucky, bought it, made some money, and then instantly went and lost it all. So over that time, I've dabbled in and out of trading. I've done it full time for a couple of years, where that was my main income, and then gone back into full-time work. So it just takes the pressure off. I'm now looking to get back into trading full-time and make sure that I can secure this as an income, and that's why I'm working through the FTMO funded trader programs. So I've got equity in there now, and making money, and hopefully get a few more accounts so I can get up to a significant sum rather than using my own equity, because when you risk your own money, often the fear and the greed kicks in, and before you know it, you've blown the entire lot. So I'm still with FTMO. I'm coming up to the end of my first month of funded trading with them, and as such, fingers crossed, I'm going to get myself a payout, only a very small one. Looking back at my results this month, it's been very up and down, predominantly because the market has been changing direction. It's been hard to really predict where it's going to go, and also January for me historically has been quite a poor month, and as such, it's just the results never look good in January for me. And so although with FTMO you have to trade 10 days, generally the days I was trading I was getting it wrong. But I'm now back into profit, so looking for a pretty good profit share with them. So again, with FTMO, I'm not sure whether any of you really know too much about those. The idea being is they're a prop trading firm, and if you can pass the challenge and verification, they will fund you to $100,000 or £70,000 in the UK. And as such, obviously that takes away the main risk of using your own money. And with the size of the accounts, you only have to make relatively small percentage profits per month to then be able to get a good return. So on a $100,000 account, 2%, $2,000, that's pretty much the minimum wage in the UK, maybe a little bit less. But compounding and building, whether you can get 2-3 accounts up to $300,000, then 2% on that, you're into $6,000 per month, and that is actually a nice income. There are lots of other similar ones around. The 5%ers or Funding Talent all do very similar schemes where you can scale up to get a reasonable account size. And pretty much there's no way I could fund a $200,000-300,000 account. It's just not viable unless I sold everything, houses, cars, you name it, and then try to trade for a couple of years to get equity in there. It's just not really worth the financial risk to do that. I'd rather trade with other people's money and just get small returns and small gains to then supplement the income I get from working, and then within 6 months to a year, fingers crossed, take that back to full-time trading again. So it sounds like William's doing the demo FTMO. It definitely is worth doing because it sticks to the rules. Just the ability to have a 5% drawdown on any one day is normally a lot more than I would ever say within a trading plan. 1 to 2% would be more realistic. If you're only risking 1% on a trade, then 2 or 3 losing trades in a day, you're down 2 or 3%. That's quite a significant drawdown on any particular account. So I'd expect to generally be scaling in 0.25%, 0.5% on those sort of trades, just to get the momentum going, especially on choppy waters at the moment. So a 5% drawdown on FTMO is quite significant, although on my challenge and verification I did get very close to it. But again, having stop losses in place made sure that I didn't actually hit those. Yeah, when COVID's out of the way, it would be good to at least get back out and catch up with traders, especially in the Glasgow. I really do miss the meetups and getting down to the Crystal Palace, Wetherspoons. It's always nice to get some of the cheap food and cheap drinks and just chat trading. So I'm hopefully going to do some of these live streams on a more regular basis, just going through the market scans and hopefully get a bit more interaction with people out there. So what happens to stock of a bankrupt company when it's bought by another one? Pretty much the administration company will kick in, and as such the stock, depends if you're talking equity stock on the stock market. If it goes bankrupt, that goes down to zero, and therefore there is none left. So with that one as such, normally if you've got physical stock in a company, so we look at Debenhams, there's lots of stock there, Boohoo taking that over, and therefore they're going to be selling that off cheap in a fire sale to try and get some money back. But yeah, typically if a stock goes to zero, then all the investors and money lose it. The last company I know that really hit that I had an interest in was Flybe. So if you look back at the charts on Flybe into 2017, 2018, they were being absolutely annihilated. Price dropped dramatically. There's a huge gap down when they announced they're going through a restructuring. Price dropped down to, I think, about 10 pence a share. Obviously Virgin came in and wanted to buy it, and Eddie Stobart. But after that one, it just went absolutely pear-shaped, and they had to go and liquidate the company. So the money that Virgin and Stobart put in, they lost all that, and anyone who owned those particular shares, they all lost their money as well. So it can be a pretty tricky one if you actually are owning stocks. And that's why typically I'm going to be more spread betting and trading stocks rather than actually owning the actual stocks themselves, but with always it's diversification of portfolio. It's making sure you invest in secure institutions. But we also know that we all thought banks were secure at one point, and we saw how dramatically they dropped down in 2007 when they pretty much all went bust. So there is no safe, secure market anymore. But at the same time, you don't want to be keeping your money under the bed or in Bitcoin, because you can easily lose your cryptocurrency wallet, or your mattress can catch on fire. Right then, I've rambled on for 35 minutes now. As I said, I'm going to try and do these on a regular basis, just with some scans of the market. And I say, anyone in Glasgow will get the meetups going again once COVID's out of the way. Fingers crossed, April, May. But depending on anything else, it probably might be nearer to June, July. But yeah, definitely keep in contact, comment and like on the videos, and I will do my best to speak with anyone more coming. What do you trade more? I predominantly trade at the moment gold the most, because it has been showing a nice range bound and reacting quite nicely to support and resistance. But other than that, I try and stick with FTSE and GBP USD, predominantly because I tend to get a bit of feel for those two, especially when you start just getting more of the news articles coming through, because they're both UK based. We can, although I'm not a fundamental trader, because every single news article is going to be relating to pound sterling or FTSE being companies. That's why I can tend to see that I follow those more. Right then, I'm going to close off for now. Like I say, I will do these regularly each week, as well as a lot of other videos I've got coming up around new trading styles, more on FTMO. So definitely keep an eye out on the channel, and as I say, like and comment, and I will get back to every one of you. Right, cheers guys.